Eric Mwathe here for the new year. Would like to wish everybody a prosperous 2014. So for the weekend of January 4th, 2014, let's take a look at markets here. What I want to begin by taking a look is how markets are trading in different time frames in terms of fractals. For example, if you take a look at the Nasdaq for the week, it is down 0.59%, which is about 0.6% down. Now, if you take a look at the monthly chart, you see that for the year and for the month, the Nasdaq is down 1.707%. If you take a look at it from a daily view, then you see that it is down 0.27. So what I'm saying is, depending on the time frame you're looking at, you can get a different feel for the market. For the month, it seems like we are down much more than we were for the week. If you take a look at the Dow Jones, for the week, almost unchanged. For the month, which is the last 2 days, down 0.64. SPX on a weekly basis is down 0.54, but on the monthly, almost down 1%. Now, this might seem trivial, but you have to understand that there's a monthly energy that can affect a chart. There's a weekly energy, there's a daily energy, and all these things are very confusing. Right now, I think it might not seem very evident, but I think unless the market can turn positive for the year, you have to start thinking about being negative. I think that's a very simple way to look at it. I told subscribers early on in the last 2 days, as long as the market is staying negative for the year, you can stay slightly bearish until the market proves itself if it can go back and into the black for the year. Right now, all markets, major markets, S&P 500, Dow, and Nasdaq are down for the year. So I think we should just all start thinking bearish a little bit here until the market turns positive for 2014. Let's take a look at the Nasdaq daily. And I think as long as the Nasdaq daily is holding above this previous weekly breakout, actually daily breakout here, the market continues to be healthy. As long as it's holding above 4,068, I believe the market is still healthy. There is no need to really be very bearish, but you have to start thinking about some bearish positions just because the market is down for the year for now. If you take a look at the Dow weekly, you see that the Dow still remains above the previous buy point of 16,886. So that breakout from this previous weekly closing high remains intact. So the market is healthy. Market is trading above the 10-week moving average. There's really nothing to be very negative here. The one thing I talked about over the weekend, the last weekend here, was possibility of forming a double top on the weekly RSI for the Nasdaq or for the Dow, and we'll see what happens. If that forms a double top, then that might confirm the thinking that we need to be thinking short for now until the market turns positive for the year. Let's take a look at the Dow from a daily view. And what you see is that, again, on the daily, market remains healthy because it's trading above the previous daily breakout level. So this breakout still remains intact, and that's a good market. You can see we are trading way healthy because the market is trading above the upward sloping 50-day moving average. So the market is still healthy. If we take a look at the S&P 500 weekly, we see again here trading above the previous weekly closing high there. So this breakout continues to be very good. Market is holding above that, also holding above the 10-week moving average. The weekly on the S&P 500 looks very healthy. S&P 500 from a daily view, we are still above this previous daily closing high of 1810.65, and the market continues to trade above that and also above the 13-week moving average and above the 50-day moving average, the net result of which you have to conclude the market is healthy. Now, the one thing I can say on a RSI from my reading, if you take a look at the RSI top lines, this line that I'm drawing here, actually let me use a different color, so I'd like to show you what I'm talking about here. So let's go with green right there. So this level here, which connects the top lines on the RSI, what you can see here is the fact that we moved above that green line, which is uniform action. In other words, the market, if you draw the line like this, the market went above it and back below it in uniform action. In my thinking, that tends to be a trap. So if that remains the case, this could have been a trap. This move here could have been a trap. And maybe the next move, the next big move in the market could be lower. Now let's take a look at some world markets. Let's take a look at the Brazilian market here. And we're going to begin by taking a look at the weekly. And the Brazilian market continues to stay below the downward sloping 10-week moving average there, which is not healthy at all. If you take a look at the MACDs, recently we went back below zero here on the MACD, and trading below zero here just confirms that this is not a strong market as far as world markets are concerned. If you take a look at the Brazilian market from a monthly chart, you see that we are very close to this very important line that connects the lows of 2002, 2008, recently here, mid 2003, and you can see this line here. We are very close. So whatever happens when we come and touch this line here, if we break that line, that's not going to be good. The one thing you can see is that the moving averages on a monthly chart are all trending and pointing lower. So the Brazilian market is not looking very strong. Remember, this is also represented or has a strong representation on with commodities. So this might also be slightly bearish for commodities as a group. If you take a look at the French market, take a look at the daily. What we see here is recently the market tried to move higher here. But really, if you take a look at the RSI came in contact precisely over here at that declining top line here, this line, which was also a back test of this previous line here. So this was a confluence of those two lines, seems to be failing. This could be a sell point as far as the French market is concerned. Take a look at the French market from a weekly view, and you see that we've been unable to break out here. We've been trying to hold above 4,300, seem to be failing. If you take a look at the French market from a monthly view, you see that previously we had sell points here and here and previously here, and all these highs were corresponding with this break on the RSI here. So this all corresponded with a break there, and recently you see that we are trading back at that level here. So this could be an area in the market that eventually becomes a major top short term, just because this is where these markets have been stalling, like it did here, which was at that level here, which was this level here. So that's the thing I'm watching to see whether we are getting a sell signal in Europe, which might also influence markets here in the US. Take a look at the German market. And what I want to point out here is this trend line on the weekly price channel here seem to have hit that level twice here and again here. That could begin a pullback in the German market. If you take a look at the London market, the FTSE, and we take a look at this from a weekly chart, we see that this seems to be some type of resistance around here. We've been unable to move above that over the last couple of months. As you can see, there was resistance here, and here still continues to be resistance. So unless we can take that out to the upside, this might be a trap. This breakout might eventually fail, and we might see the rollover. We take a look from a monthly view for the London market. Again, somewhere around here is where this market has been stalling. It stalled here in 2000. It stalled here in 2007. And we seem to be holding here. So if we can't move above this, this is going to be a triple top, which might mean that the next major move for this market is lower. If you take a look at the Chinese market and take a look at this one from a monthly view, we see that seems to be trading at the top lines of this channel here. What this might suggest is either we get resistance, or who knows, maybe eventually it breaks out above that level. Right now we are looking at this as resistance because China is down early this month about 2%. So we'll see what happens. For now, seems like this is resistance on the RSI, on the price channel top lines. The RSI obviously shows resistance here, and unless it can take out that high there, I think the Chinese market is also looking to go lower as of the current chart right now. Now, if we take a look at the FXI, Chinese ETF, we seem to be breaking this trend line here. So over the last 2 days, there seemed to have been a break there. The good thing is, seems to be there's going to be some kind of support coming from the 200-day moving average. So we'll see what happens. But this was a break. Short term means it's a sell. Maybe we find support here, or maybe we break below the 200-day moving average. Who knows? But for now, seems to be a break of the trend line, which might suggest downside pressure for now. If you take a look at this ETF from a weekly standpoint, and I talked about this previous videos, the fact that this had been resistance going back to this break here. So this has been resistance. We said break here, sell point, and this I said could be a sell point. That seems to be true, and now we are back below the 10-week moving average and back below the 33-week moving average. So maybe even Chinese ETF here is not doing well. As you can see, the RSI was also telegraphing the fact that this could be a double top, like I spoke about the last couple of weeks. That seems to be the case, which makes sense as to why we are getting this pullback. Now let's take a look at the Russell 2000 daily. And if you look at it from the price channel top lines, I spoke about this in the last weekend video. Seems to be resistance here, suggesting a pullback. Seems to be resistance here on the RSI, which could also suggest that the pullback we've been waiting for has begun. Now, it would be different if eventually we take out that RSI declining line here. If we take it out to the upside, that's bullish. For now, we have to respect the fact that this is resistance. More than likely we get that pullback. Now let's take a look at some common stock here. And based on the fact that I talked about this in my last video, take a look at Apple from a weekly standpoint, and you can see that still remains to be the case that on a weekly basis, resistance is exactly where I thought there would be resistance on the back test of this line. And we've been watching this over the last couple of weeks. That seems to be resistance, so it makes sense. It's also consistent with resistance on this line here. This line is significant because this was the break here which began this major pullback in Apple from the highs of last year, and so we are back testing that line there and seem to be failing. If you take a look at this one from a monthly view, you see that this line here corresponds to the break here in 2008 before this major drop. Here corresponds to the break recently here, which is somewhere around here, and you see we are stalling here. So I spoke about the fact that this could be where we roll over on this stock, and if it continues rolling over here, then this is going to be a confirmed sell point. Remember, this is a back test of this line here going back to 09. So we broke down here and now back testing and failing to hold above that line. All this to say that it seems to me that this stock has begun the pullback, and this pullback might actually be meaningful. We'll see what happens.